Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005, still alive, 2026. Okay, today, market, chart of the S&P 500. We are Monday the 13th, and the war is back on apparently. Man, this guy Trump got a Trump. He's always got to do something to throw a monkey wrench into the equation, which is, it's good because despite what you feel, whether you're angry or not, whether you like him or not, it does give volatility into the game, which means there are opportunities. Okay, he creates opportunity despite what you might think. Okay, so we'll get to that, the war back on, and the implications. And we actually did a new trade today, thanks to that opportunity. Okay, that Trump provided for us. So let's get first into the technicals. Okay, we had the war back on, and the market's down 0.77%. Guys, we're still hovering at highs. Okay, technically speaking, look, we're above the 50. We're still doing well, and yet the fear is palpable. Okay, we are consolidating at the highs. We're still doing very well. Nothing is broken down yet, despite the war back on. Okay, sentiment back to fear. We were at neutral, and this one day brought it back down to fear. So just think about it. We're at fear at all-time highs because the war might come back on. I don't know. It doesn't feel very, very bearish to me. But anyways, everything, the stop price strength, breadth is coming back slowly. The people buying puts now for sure. Okay. So everything is still in the fear camp, which is pretty good for the bulls. Doesn't mean we can't chop around here for a few more days. Who knows? Remember, guys, we are in Opex right now. This is Opex week. I expect a chop. Okay. And this is where the opportunities rise. Okay. So we will get back to that and what it means. But, sentiment and the technicals are on our side so far, okay, despite what you hear in the headlines, okay? So let's get to the war back on, okay? So, big news, Trump proposes a 20% toll on the Strait of Hormuz. This guy's acting like a mafia boss. Okay, he has a protection racket going on. Any ship that goes through pays us a toll of 20%. You're going to pay us protection, okay? I don't know if that works. This is not very good for inflation, apparently, okay? So the war is back on, okay? Apparently, I don't buy it. It's probably a short-term kind of thing, which is, Trump always does these things and then backs out. We'll see. But first, we always look at oil. And now we suspect that after these oversold conditions, we're getting a bounce. And up to that level, the neckline, the $79 level, we're at 78.33 on the barrel. 79-ish is where we hit this level. And we're recycled. We're back to neutral. Okay, we could go higher if it escalates. But this is a classic move of, look, up 9.6% today. This is huge, okay? This is resistance now. We're coming up to resistance. However, okay, you have to make it noted that, look, every time oil goes down, we have these vicious rallies that come back, okay? These are like bear market rallies, okay? Or like oversupplied market rallies is what I like to call it. You will get this extreme volatility, okay? A little bit higher, and I'm going to add more short exposure, okay, short term in nature, because we do have longer term short exposure. So this is going according to plan. It's squeezing people. We mentioned again, we're at levels where the RSI is neutral. It can keep going higher, but overall, we think it's going to form a lower high and then head back down again. Okay, this is what I think oil is going to happen in the future. I don't think Trump maintains this aggressive stance, especially the closer we get to the midterms. It's political suicide. Okay, so yes, we have oil, we have gold getting smoked. Okay, gold is down 3%. That's huge. Okay, so we're consolidating near these lows. Okay, can we go even lower and hit this level of 39.23? Yes, everything is possible, and yet we'll have even more negative divergence. We had it here when we dropped lower here. We had negative divergence positive divergence. Positive because the price was going down and the RSI was going up, and here, but we didn't have it in the MACD. Okay, but we will get it here if we ever cross below this 39.23 level. We're gonna get still positive divergence in the RSI, and we're gonna probably get it in the MACD too. So we're gonna have a lot of factors in our favor for gold going forward. I like it. I like the washout. I like the fact that nobody's here, and we're still bearish. Okay, technically speaking. So everything looks bad. And what else? Underneath the 200 and a death cross. So everything technically is bad. But remember, gold does not behave like a normal asset. Okay, this it behaves based on its own direction and basically on sentiment. A lot of people are throwing away the baby with the bathwater because, guys, we're at $4,000 gold. Okay, I have juniors that are increasing with every piece of news. They're increasing the value of their resource. Okay, they're very tightly held. They're getting like in orders of magnitude better in terms of the drill results and the expansion of the properties. And the stocks are down 40% from highs. Okay, they are literally, some of them have PEAs, and the PEA is showing money at $2,000 gold, at $3,000 gold. They're printing money, and the stocks are down 40. Some of them almost 50, but around the average is like 40. Okay, which is crazy. This is what the opportunity lies in, unheralded sectors that are being thrown out with the babies are being thrown out with the bathwater. Okay, so I like gold here. Okay, I know it's going to take months. Okay, but we have to bring it up because gold is also a war play. Okay, and an insurance play. So what else got smoked today? SMH. SMH is down, forming highs. But let's go before SMH. Let's go to the Kospi, the Korea index, because this is supposed to be an AI proxy. And look, it's down 8-9%. This is huge. Okay, so it's down a lot. Let's see what the moving averages have to say. Oh, the 200 could go even lower. It's touching the 100, sort of stayed at the 50 a little bit before getting destroyed. So Korea is getting destroyed, but the SMH is not like Korea. We're right at the 50 again. This is beautiful. Okay, so get rid of the moving averages. So let's revisit some of the trades that we have in the SMH. Okay, we have MU. Okay, we sold a 700 put on MU. Let's write it, guys. I erased it, sorry. We sold a put because it was very, very high. Okay, the implied volatility was very, very high as it approached the 50. Okay, and it's going to touch it again. I hope to undercut it before adding more. Okay, and the reason we did this, because the opportunities here, we mentioned the opportunities of this war trade are huge, because now you have the semiconductor sector being, again, like the baby thrown out with the bathwater. It's still very strong though, and you can get these prices here at very, very high levels. Okay, like MU. If you look at MU, the implied volatility is huge, but it will expire in 4 days. So we're getting paid for selling premium here. Okay, and look at Intel. Remember we had a short at Intel 88. It's down again. It's almost at the 100 level where we will break even on this trade. After so much pain and suffering, we might actually break even, and who knows, because we shorted a put here, a $100 put that expires again on Friday. Okay, we did that for about $2.50, if I recall. Okay, and that means that we're breaking even if we get out at 100. The ideal situation for us would be, this is what I'm looking for, is for Intel to close above 100 by Friday, and then I'm going to short another 100 put at like $5, expiring in a week. We're going to do these weekly rolling of puts to collect premium and hopefully get assigned, because now we are selling covered puts, if you will, because we're short. Okay, and if we get assigned, great, we cover and we will make money. Okay, we will actually, if we get assigned now in this cycle, which is on Friday, which is June the 17th, if we get assigned there, perfect, we break even on this trade, which is great, considering how bad it was for us. Then we're short at 88 and it went to $1.40. Anyways, but if we don't get assigned, we're going to sell the next week's put, and it could be around close to at the money. If it's around 100, whatever the $100 is, I think I like that price. It's very nice and round. Okay, and we're going to keep doing it. Okay, depends if we get a real flush, I'll just cover the shares. Okay, who knows? But I really want to get assigned on these shares to cover this short position and be out of it. Okay, so this is where the opportunities lie. In thanks to Trump, we get these high IV moves because as prices go down, the implied volatility of the options goes up. So it behooves you to sell premium at that point. Okay, and shorter dated premium is very, very elevated, and you can go far, far out of the money. Speaking of that, this is the trade that we did. Okay, I like this stock, Bloom Energy. Okay, let's get rid of the moving averages for now. Bloom Energy, it's cleaner. Okay, you see it approached this support level at 232. Okay, and here we sorted another put. Yes, it's all naked. I'm comfortable shorting naked puts, especially the ones that expire in 4 days. Okay, this is what we did. Okay, we shorted the put here that expires on Friday. Let's bring in the here. This is what we did. July 4th, 4 days BE. We shorted this put here, the 190 put. We got it for, it's trading at 240 to 267. We got it at 250. Okay, so that's great. Always short. And look at the implied volatility here. Okay, this column rate, 173%. These are the opportunities that you want. Okay, and you get, at the time it was a 10 delta, which means that in 4 days there's approximately a 10% chance that we lose money, 90% chance that we win. Okay, so I'm comfortable going naked. You have to make sure that you want to own the stock at 190 and do it as small as you can, that you don't get freaked out on assignment. Okay, so I like this trade. I did it 4 days left. Okay, and we're in Opex, so option expired. They're going to probably try to crush volatility. Okay, which is, we have a lot of things on our favor. Nothing, of course, is 100%, but I like this trade here. I don't mind getting Bloom Energy at 190. Okay, which is around here. So let's reiterate, guys. Okay, SPY consolidating at highs. The war is back on. This is an opportunity to go long if you were looking to go long, which I am. Okay, because we are still hovering at highs. We have, the sentiment is at fear and neutral, plenty of room. Okay, we can still go lower, which is beautiful. If that happens, I will pick up more. Okay, so you have oil going up. Bear market rallies are huge. This is what squeezes people. Okay, we went from what, 68 to 78, $10 in like a week, but really in 1 day because of Trump. So, you got to bow down and thank him for that move, because this is a gift, I'm telling you. And I hope it gets higher so I can short, maybe covers this gap here, then I'll start shorting again. Okay, I'll short the USO. Okay, the USO, I don't know, maybe it gets to this level, maybe it gets to 130 again. I don't think so, but who knows? If it gets there, I'll be shorting a much higher level call. Okay, so we like this move. Gold, still waiting, still a pariah, still heavy. Okay, this is summer trading. This is how it looks like. Expect pain before going higher. Okay, meaning that it could churn here for a while, it could undercut, it could do all these crazy things. Be prepared. Remember, you are accumulating this. I'm doing it. I'm accumulating stocks. I'm not actually buying more gold. I'm buying miners, and expect to hold them for a while. Okay, months. That's how we're going to realize the gain, and you'll see it's going to be very, very painful in the short term, but hopefully the reward comes later. Okay, and we had the SMH. We had our trades in Mu, which I like. Okay, we shorted the 700 put, and look, it looks devastating. Like, it looks like the semiconductors and the Kospi. Remember we saw the Kospi? The Kospi is devastatingly down, but Mu, Micron, what, down 4%? Nothing. Okay, I expect this to expire worthless. Okay, and of course our new trade in, well, let's go for Intel first. Hoping for Intel, I have a short put at 100. Hopefully we can cover our short and we can break even on this trade. And the new trade that we did, guys, is Bloom Energy, right at support, selling this put, elevated, 4 days to expiry, very, very high IV of 170 plus, and close to this level right here. If it ever, this will expire worthless, and if it ever goes down, I will be looking, maybe if it ever touches this level again, to short another put down here. Okay. But I hope that this expires worthless so we get another chance to shoot at this stock. I like Bloom Energy. Very, very good, solid fundamentals on this company, and I want to go long. So that's it, guys. Let's see what happens. Remember, tomorrow, the important stuff, we have CPI and PPI, which I expect will be cold, okay? Because, the past month inflation was muted. Forget today. Today it might go up, but for the past month it was pretty muted. And Opex. So I expect choppiness, maybe go higher. Okay, I'm expecting if inflation comes in hot, then we can go down again. We can drop a little bit more. Okay, it depends how the market reacts. We'll see how strong it is back then. We have to evaluate as it happens. All right, guys. So let's see what happens tomorrow with the inflation numbers. All right, later.